Bank of America last year had 1 billion ounces short in physical silver naked and about 40 million ounces short in gold. What if Bank of America failed to deliver?
What are your expectations there for 2025?
I think there'll be much higher inflation. You know, the inflation numbers came back at an annual rate of about 3.4% recently. And we can debate all day long. As corporate execs are cashing out, 46% of U.S. investors see a 10% less chance of a market crash. That's the highest exuberance we've seen since 2006 or before. My point to you is that this is a risk-on environment right now. Gold and silver are taking a breather. They are not in focus at things like Bitcoin, things like Apple, things like Nvidia, things that are risk.
The late Ted Butler, a renowned expert on COMEX, highlighted significant short positions in precious metals, such as Bank of America's reported 1 billion ounces of naked short silver and 40 million ounces of gold. Concerns arise about the consequences if such obligations cannot be met, potentially driving higher inflation. Recent inflation rates stand at 3.4% annually, while corporate executives cashing out and a surge in investor optimism, 46% see a market crash as unlikely. As the focus shifts to assets like Bitcoin, Apple, and Nvidia, gold and silver are temporarily sidelined, taking a breather amidst this exuberance. In an interview, Alasdair Macleod estimates China holds 38,000 metric tons of gold, 20,000 by the state and 18,000 privately, though official claims are far lower. The speaker, AndySchectman, discusses skepticism surrounding global gold reserves, including in the U.S. as transparency is lacking. If a gold-linked monetary system is reintroduced, as Judy Shelton suggests, with ideas like tying a 50-year treasury to gold, trust in economic policy could be restored. Meanwhile, nations like China quietly accumulate gold through proxy banks and sovereign wealth funds, exploiting Western banks' price suppression and supply drawdowns, potentially positioning themselves for a new gold-backed financial system. Andy highlights, 8 commercial banks hold the most prominent concentrated short position in any commodity on the COMEX, exceeding 700 million ounces of silver, with naked shorts driving prices down despite a structural supply-demand deficit. The LBMA faces a 4 to 6 billion ounces shortfall, trading up to 3 billion ounces daily, 10 times its silver backing and 3.5 times the annual global mine supply. This manipulation, largely unsupported by physical silver, has led to significant silver outflows from the London Bullion Market Association. Meanwhile, India has imported nearly 900 million ounces in recent years, highlighting the disconnect between supply, demand, and suppressed prices. Let's explore the video in more detail. If you find this content helpful, give it a thumbs up and subscribe to stay updated with our latest videos.
2 years ago, Alasdair said the Chinese had 38,000 metric tons in his estimation, 20 by the state and 18 by the people. What better way to say, actually, we have 45,000 metric tons, not the 26 that we told you, because this gold find, well, God, it was huge. Well, how would we know? How would anyone know? My point to you is simply this. Do not trust what they're saying as it relates to gold, because we're playing the same game. No one knows how much gold we have, if we even have it any longer. And if indeed we are moving to a system that is tied to the stability of gold, as Judy Shelton says, is the only way to reestablish trust. Now, hers is not quite the gold standard as it once was, the classic gold standard, but tying a 50-year treasury to gold, which would be the first pathway to reestablishing trust with the United States monetary policy. Same thing is true with global monetary policy. And if that's where they think it's all going, it doesn't do them any good, not only to tell everyone how much gold they have, but to keep their mouth shut in terms of how much through proxy banks and sovereign wealth funds that they are draining from the COMEX and from the LBMA, using the stupidity of the Western banks that continue to suppress the price. And look at the drawdown in supply. We're just playing right into the hands of these countries. So it doesn't do any good to say how much they're accumulating or how much they have if the ultimate goal is to reintroduce this asset into the backing of a new monetary system. And I think ultimately that is where it will go. The question, Kai, is why are 8 banks holding the largest concentrated short position in any commodity traded on the COMEX market, about 700 plus million ounces? But 8 commercial banks hold what amounts to the largest concentrated short position in any commodity ever traded on COMEX. And why is there a 4 to 6 billion with a B ounce shortfall on the LBMA in naked shorts, meaning they're shorting the price, trying to drive it down with nothing standing behind it but a big checkbook? And that really, to me, is the biggest question. And I've talked about this at length, where, the military industrial complex has removed silver from the Silver Institute metrics. And here we are 4 years into a structural supply demand deficit, another 240 or 50 million ounce shortfall again this year, amounting to over 1 billion ounces short in the last 4 to 5 years from supply to demand. And at the same time, why isn't the price rising when India has imported close to 900 million ounces over that same period of time? That's more silver than the entire stockpile is at the LBMA. They say they have 800 million ounces, Kai, of which 500 million purportedly belong to the ETFs. That leaves a 300 million ounce float. The LBMA is trading, by their own admission, 290 million ounces per day, the entire float. But what is interesting is they admit to that number being 10 times understated or more, because they only post the final settlement numbers each day, not all of the trades that it took to get there. So in essence, they're saying, well, we're actually trading upwards ends of 3 billion ounces of silver per day, which is 3.5 times annual global mine supply, 10 times the amount of silver they have backing those contracts. And so those commercial banks that are doing this, that are shorting the price of silver, all of them west, are doing so at 90 to 95% naked clip, meaning they don't have the silver behind it, just big checkbooks. And this is why you see a 45-degree angle of the silver that was held at the LBMA now is being drained and has been delivered away. The same thing is happening on COMEX, and the same thing is even happening on the Shanghai Metals Exchange. The metals are being drained. Now, I would say they're doing it very strategically. They are not doing it in a manner that is arousing too much attention. Am I able to share my screen with you by chance?
Andy exposes that inflation remains a persistent challenge, driven by policies favoring a weaker dollar and low interest rates, which erode purchasing power. Efforts to rekindle domestic manufacturing, as proposed by Trump, would require massive investments in labor, retooling, and training, potentially triggering a severe economic downturn or depression. To address the unsustainable $37 trillion debt, policymakers will likely continue inflating it away, delaying austerity measures and deferring tough economic reforms. This approach may lead to prolonged or hyperstagflation, where economic stagnation coexists with relentless monetary expansion. Andy explains that despite official inflation figures of 3.4%, alternative measures like those from ShadowStats suggest that the actual rate could be closer to 12%. The U.S. faces a grim fiscal reality with a debt-to-GDP ratio of 23 to 1, not accounting for $165 trillion in unfunded liabilities. While harmful, inflation is seen as the lesser evil than immediate economic collapse. Policies signaling a preference for inflationary measures underscore its inevitability, suggesting that rising prices and declining purchasing power will persist as structural challenges for the foreseeable future. Now, let's dive into the interview.
If you're going to inflate, because here we are 65% away from their target rate, lowering rates, rekindling inflation. By dropping rates, they're not signaling victory over inflation. They're waving the white flag on inflation. And you talk about potential tariffs, that signals price inflation, no question about it, price inflation. But all of the policies of a weaker dollar and low interest rates are inflationary. They speak to loss of purchasing power. And I think the only way to continue this charade, look, if we took Trump at face value, Kai, and he wants to bring things back, onshore manufacturing, just the cost of labor, the cost of retooling all of the manufacturing, which we don't have anymore, and training people is massively deflationary. It would send us into a depression. I think the only way to get to that point, kind of like the Shawshank Redemption, where you got to crawl through 2 miles of crap to get to the other end, is the debt. And it is the only way to deal with that debt would be first to continue to inflate it away before we start to impose austerity, before we start to make the tough decisions to bring back our manufacturing, to do all of these things, to make this country great again. As Trump talks about, you have to deal with the debt. You have to deal with the realization that if we did all of those things, it would create a depression just like that. And so I think they will continue to inflate away the debt. They will continue to use inflation. And at some point, maybe he comes back after 6-8 months and says, look, We've done our part. We've slashed $2 trillion from the budget, which would still leave, by the way, even with Doge's aspirations, over $1 trillion deficit. So he comes in at almost a $37 trillion debt and leaves with a 41 or 2. It doesn't solve the problem. And he'd say, look, this is a much bigger problem, and it's our patriotic duty. We've made government much smaller. We're going to continue to fight the good fight. But in order to make this country great again and bring back our manufacturing and make this country the engine of growth, we have to all suffer and we have to all pay. And maybe his cabinet can bring this country a little closer together in terms of unity, where it's not just focused on Trump, but his cabinet, who I think is fantastic on many levels and could inspire confidence. Look, no matter what we say, I am thrilled that he's in office, because we have become so ununified, and we have lived through bizarro world, through all of the craziness. And I don't have to rehash all of the craziness we've seen over the last several years, but that's a step in the right direction. But to get to the other side, to get to a place where, the debt to GDP number we have right now at 123 to 1 doesn't even take into account the Medicare, Medicaid, Social Security, and government military pensions of $165 trillion. We are broke, we are insolvent, and there is no way to get to the other side without dealing with the debt. And I think they will always choose inflation, even alongside the tough decisions. So what would that look like? It could look like stagflation, God forbid hyperstagflation, where the Great Depression meets the printing press. But I do think inflation is here to stay, and I think their policies are highly inflationary. Just the very fact of signaling we want a low dollar and low interest rates, that signals loss of purchasing power. This is inflationary. So yes, I would say inflation is not going away, and the statistics by which the BLS measures inflation by is fugazi, for lack of a better definition. And you just talk to John Williams of Shadow Stats, he'll tell you to put an 8 in front of the 3.5 and at a +8. You're closer to 12% inflation than you are to the number that they're saying of 3.4. And that 3.4 is 60% away from what they're striving for. So yes, inflation is here to stay, and I think it's just getting started, unfortunately, but it is probably the lesser of two evils.
The financial landscape is fraught with risks, from significant short positions in precious metals and opaque gold reserves to persistent inflation and mounting debt. While inflationary policies may stave off immediate economic collapse, they exacerbate long-term challenges, including declining purchasing power and potential stagflation. The disconnect between supply, demand, and market manipulation in commodities like silver further underscores systemic vulnerabilities. As global powers quietly prepare for a possible monetary reset, the need for transparency and strategic foresight becomes ever more critical. How might a shift toward a gold-backed financial system impact global economic power dynamics? How can individual investors protect themselves from inflation and market manipulation in precious metals? Drop your thoughts in the comments section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos.